Welcome to Wealth Wisdom Works. My name is Alan, and on this channel we talk about all things money, finance and investing. That's also what I cover in my book, The Wealth Wisdom Blueprint, which is available on Amazon. I'll leave a link to that in the description below. Today we're going to be taking a look at creating a winning investment habit, a guide for beginners. Before I start, I'm not a financial advisor, so any information I give is for entertainment purposes only and does not constitute financial advice. Always consult a financial advisor for specific advice relating to your individual circumstances. So here we go. Step 1. Start small. Starting small is an excellent way to develop a habit of investing. It's easy to think that you need a lot of money to start investing, but that's not the case. By investing small amounts regularly, you can make progress towards your financial goals without breaking the bank. In fact, some investment platforms allow you to start with as little as £25 per month, and there's other platforms where you can deposit absolutely anything that you decide to at any point in time with no minimums. So there's no excuse for not getting started, and you can start from virtually nothing. One of the advantages of starting small is it allows you to get into the habit of investing regularly. This habit is crucial to long-term success in investing. By investing regularly, you'll be more likely to stay on track and make progress towards your financial goals. Another advantage of investing small amounts regularly is that it can help you avoid the mistake of waiting to invest until you've got a large sum of money. Many people do this and they delay investing because they think they need a significant amount of money to get started. This delay can be costly because it means that you're missing out on potential returns over time. Finally, investing small amounts regularly can help you avoid the temptation to time the market. Trying to time the market is a risky strategy, and that can lead to significant losses. By investing small amounts regularly, you're less likely to be affected by short-term market fluctuations. And this approach can help you stay focused on your long-term goals and avoid making impulsive investment decisions based on short-term market movements. Step 2. Set up automatic investments. Setting up automatic investments is a simple yet effective way to make investing a habit. By automating your investments, you take the pressure off yourself to remember to invest regularly. This means that you won't miss out on investment opportunities or forget to invest altogether. It also ensures that you're investing consistently, and that's the key to long-term wealth building. Most investment platforms offer automatic investment options, so it's easy to set this up. You can choose how much and how often you want to invest, and the platform will do the rest. You can also adjust these settings as your financial situation changes. Another advantage of automatic investing is that it allows you to take advantage of pound cost averaging. This means that you'll be buying more shares when the prices are low and fewer shares when the prices are high, and over time this can result in a lower average cost per share with potentially higher returns. To maximise the benefits of automatic investing, it's also important to set up automatic reinvestment of dividends and capital gains. This means that any money that you earn from your investments are automatically reinvested, which allows you to grow your investment faster. What you're doing there is you're benefiting from the compound effect. Step 3. Make it a routine. Establishing a routine for investing can be challenging, but it's crucial for success. Here are some tips on how to make investing a habit. Set a specific time. Set a specific time each week or each month to review your investments. This could be on like a Saturday morning or the first day of the month. Having a set time will help you remember to do it, and it'll make it easier to fit things into your schedule. The next thing is make it a priority. Investing should be a priority in your life, just like paying your bills or going to work or feeding yourself. You need to make a conscious effort to prioritise it and make it part of your routine. Next, automate it wherever possible, like I mentioned previously. Automating your investments can make it easier to stick to that routine. Set up your automatic contributions to your investment accounts each month so that you don't have to remember to do it yourself. And the next one is keep it simple. Investing doesn't have to be complicated. Choose a few investments that are aligning with your goals and your risk tolerance and stick with it. Keeping it simple will make it easier to stick to your routine. And the next way to help you do this is stay accountable. Find someone to hold you accountable for sticking to your routine. So that could be a friend or a family member somebody else that also invests, or who's got an interest in finance, or it could be a financial advisor. But having someone to check in with can help you keep on track, and you can both make each other accountable for doing that, so it might be helping someone else at the same time as helping yourself. Next, track your progress. Keep track of all your investments and your progress towards your financial goals. This will help you see the impact of your routine, and it will help you stay motivated to continue investing. Remember, establishing a routine takes time and it takes effort, but it's worth it in the long run, believe me. By making investing a habit, you'll be better positioned to achieve your financial goals and build wealth over time. So step 4, focus on the long term. It's essential to understand that investing is a marathon, not a sprint. Long-term investing allows you to ride out the inevitable ups and downs of the market and potentially earn higher returns over time. It's important to resist the urge to constantly be checking your investments and to make frequent trades based on short-term market movements. Instead, what you should be doing is focus on the underlying fundamentals of the companies or funds that you're investing in, because this is what made you invest in them in the first place. Look for companies with strong financials, consistent earnings growth, and a track record of success. Consider diversifying your portfolio across different sectors and asset classes, and that's going to help you manage your risk. When it comes to long-term investing, it's also important to have a clear understanding of your investment goals and your time horizon. Are you investing for retirement, a down payment on a house, or something else? Your goals and your time horizon can help your investment decisions and ensure that you're taking an appropriate level of risk. By focusing on the long term, you can avoid the temptation to make short-sighted investment decisions and build a portfolio that can help you achieve your financial goals over time. Step 5, stay informed. It's important to understand that there are different types of information that can impact your investments. Economic news, global events, company news, and market trends can all affect the value of your investments. It's crucial to stay up to date on these different types of information to make informed investment decisions. One way to stay informed is to regularly read the financial news and analysis from reputable sources. Many news outlets offer a daily or a weekly newsletter that summarises the market news and the trends. It's also a good idea to follow financial experts and analysts on social media or through their blogs for their insights and their opinions. Another way to stay informed is to regularly review the performance of your investment. This can help you identify any trends or patterns and make any necessary adjustments. Investment platforms typically provide regular updates on your portfolio's performance, and you can also use investment tracking tools and apps to monitor your investments. Step number 6, celebrate your successes. Last but not least, don't forget to celebrate your successes. Investment can be a long and sometimes challenging journey, so it's important to take time to celebrate your wins along the way, whether that's hitting a specific investment goal or achieving a certain level of return. Take time to give yourself a pat on the back and keep yourself motivated. Celebrating your successes can help you keep motivated and reinforce the habit of investing. It's important to recognise the progress that you've made and all the hard work that you've put in towards your financial goals. Celebrating those successes can also help you stay positive and resilient during market downturns or difficult times. When celebrating your successes, take some time to reflect on what worked well for you and what didn't. This can help you identify areas for improvement and refine your investment strategy going forward. In conclusion, by following these 6 steps, you can make investing a habit and you can achieve your financial goals. Starting small, setting up automatic investments, making it a routine, focusing on the long term, staying informed, and then celebrating your successful are all essential components of building a successful investment habit. Remember, I've said this before, but investing is a journey. It's a marathon, not a sprint, to use that old cliche, and every small step counts. Establishing investing as a habit takes time and effort, but the rewards are well worth it. So start small, stay disciplined, and celebrate your successes along the way. So if you're looking to take control of your finances, understand the basics, and grow your wealth, then this is a channel for you. Make sure that you like this video and subscribe to this channel, and it'll keep you up to date with all my latest videos. And let me know down in the comments which topics you want me to cover in future videos. So, thanks for watching. Remember to check out my book, The Wealth Wisdom Blueprint, which is available on Amazon, and the description is down below. And I'll see you in the next video.